Here I got another video for you. Today we're not going to be talking about too much. It's just going to be covering the topic of to learn more and more about day trading and literature. I want you guys to have a little bit of an understanding of what to expect in terms of the progression of day trading. Like there are certain, just to summarize, basically what I mean is there are certain set in stone, like do this, do that, that. So like, learn about literature, learn from people that have already have mastered it, or at least are in a higher level than you currently are. Read literature, like, from different authors that know about day trading, the stock market, things of that nature. Um, Whether you trade options or futures, whatever you pick your poison, whatever it is. But besides the set in stone type of stuff, there is going to be some stuff that's subjective to you and your experience, and I just want to go over that in detail because sometimes as you learn and gain more screen time and more experience, you're going to just all of a sudden notice like these certain skills and things that you're able to analyze. You didn't necessarily like expect it to happen like that. It just comes out of nowhere. So what I want to go over and what I want the best way for me to explain this without making it too much jibber jabber, let me go to my monitor tab so we can look at my trades, for example. One second. Sorry, I got some badass equipment, guys. This is shit. Let's see here. Bam. Bam, bam. Bam, bam. Okay, so real quick, I'm going to show you guys an example. So June of 2024, right there. So as an example, as you see here, I'm just showing you of the month of June for this year. So back then, I was a very low volume trader. And what I mean by low volume is I would be very, very picky with the setups and would take as little as anywhere from like 2 to 7 months, 2 to 8 trades, roughly averaging in that range per month. It would be somewhere around there. And sometimes I'd be successful in green. I'd always have the same story. It would be have a very good green month, a break even green month, or if I ever was red, it would be very small to the point to where it could be easily reversed by a medium-sized winning trade. Now, the problem with this is that there were many setups, and um, I was trying to make it too set in stone and not taking into consideration the factors of how the market moves. It is good to have certain things, and you need to work a data set to see what works with you. But due to my style of trading, what I look for, and my account balance with how much capital is in this, it doesn't typically work for me because my P&L would just swagger like this. It will go and sway up and down, up and down. So what I wanted to do was the problem with my style is after speaking to a mentor, the problem might have been a lack of frequency and volume in your trades. Because again, the more trades that you take on an ongoing basis, the bigger of a data set you have, and the more you'll be able to actually tell if that strategy works for you or not. Basically, to make an example, obviously you want your trades to be high quality, but if you take 50 trades in a month, 30 to 50 trades in a month, you have a larger data set and a bigger number of trades to pick out from, saying, hey, this is why this worked out, this is why this didn't work out, compared to if you do it this way. And again, there's nothing wrong if it works for you. This is just my personal experience, compared to if you take 2 to 8 trades in a day, in a month, because then obviously you're going to have a lot less data to work off of. Now, I didn't know exactly how. After speaking to my mentor, I didn't exactly know how I was going to be able to take more trades. So I started off by just having other markets open. So I would look. I trade SPY options, but I'd also have Microsoft, QQQs, and all of the. I have this watch list right here with the top performing companies. Tesla, Apple, Netflix, Google. I also have the IWM stock that I look at, Nvidia. There's a few more. Or no, those are mainly the ones that I have on my watch list that are the most important. And I have that as a way to look at the market to see if there's high confluence and conviction to want to go in that direction with the trade I'm looking at. And then after that, I started taking as frequent as 3 trades a day. I think the most trades I've taken in a month so far is roughly under 30. I still get picky and I'm still learning, but to cover what I mean by as you learn more about trading, you start to pick up on things, and you start to have a deeper understanding of the market and a deeper understanding of trading. And you typically do good habits and good things that you didn't even anticipate was going to happen. It just happens. So, to give an example, uh, in August, this was the best month I ever had, man. The best month I've had of trading. Again, it's not like a crazy amount of money. I'm not rich yet. I'm not a get rich quick guy, but I've again roughly relative to the amount of time I've started with my trading career and how much capital I trade, because I only trade roughly 2 to 3 or 5 contracts per trade. So I've made a couple few $100 winners at winning trades, and I've also had a month that was almost a net profit of net P&L of a little under a grand. So again, it's still progress. Now, when you look at August 2nd, for example, I'm giving you this as an example. Due to the fact that I have screen time experience, I was a and my understanding of the market from a higher time frame, looking at higher time frame markets, understanding news, where we are at in the chart, understanding the psychology of other institutions, what most likely is to happen due to the given context on that day, and being able to go with the waves, understanding that this has a higher probability of working out. So I'm going to go along with that, or be prepared to lose on this trade and get out with the proper risk management in place, or maximize my profits and do what's needed to take my wins and get the fuck out. But I'm gonna show you August 2nd, for example. On August 2nd, this was the best trade of my career in terms of the how high the not P and L wise, because I only took trades this day. If 2 contracts, if I took 5 contracts, my full position size, it would have been a little under a grand. But this is in terms of how high in value the how high the contracts went in value. Okay, because if you've been in trading and you've traded, you understand that this is quite a substantial move, and almost like a dollar, a little $1.60 basically. That's a 1.60 points in upwards in the value of my contract. That's a big number. Now, let's go to the chart real quick. I know I make a lot of gibberish. I try my best to be able to keep jam packed what I'm trying to teach, but it is pretty difficult for me. So sorry, guys. I am doing my best, but as I'm pulling up the day, August 2nd, I want to make an analogy for you to try to understand what it is I'm trying to articulate. When I say as you gain more experience and you learn more about trading and you get more screen time experience, you typically are able to see and the market in a deeper level than you would before. In boxing, right? I so for any of you that are familiar with boxing, or if you know who Ryan Garcia is, for example, he even said this in an interview with Mike Tyson one time. He says that when he turned professional, he started gaining skills, and he was just able to do things differently that he wasn't able to do as an amateur. Like, so when you first start boxing, they practice jab, right hand, hook, all that type of stuff. But as you spar, you start to learn what certain boxers do, for example. So, for example, you understand. So, say if they teach you when your opponent throws a hook, you roll under and counter, right? Now, say for example, when you first start sparring, you're not able to really see that and read it because you don't have the timing, the reaction timing. You don't know how to fully anticipate the punch properly, and you don't have the agility to go under it. But as you start to spar more and more, you're able to read when an opponent's going to throw it, and you're able to slip it and then counter with your own hook to the body or hook to the head. Now, obviously, as you start to get more time, you're able to read things, and you're able to learn how to react to certain punches. Now, say for example, on an even deeper level, maybe you learn that the person likes to throw a hook. Uh, that's like a basic getting better to know level. But then after that, you start to learn something like, a deeper level on how feints, are able to what's it called, set opening. So for example, say if you throw your feints and you learn that opponent likes to do this and they shell up right here, maybe as you learn you can jab, and then as the rounds go on, your opponent isn't expecting it, you can fake the jab and then go a hook around the side and then go to the body, for example. As a beginner, you're not able to learn to do those things because you're just a beginner. But as you start to get more boxing experience and sparring rounds, you're able to read that. That's the best analogy I can come up with in terms of how it happens with day trading. And sometimes you don't even necessarily knew that you were going to be able to read it that way, or that you were going to be able to, because you train feints, jabs, and stuff like that, but you didn't know that your opponent was going to do that, and you were going to be able to read it that way. I hope that makes sense. I think I articulated it okay. Obviously not perfect, but I think you guys get the gist of what I'm saying. So take that mindset with day trading. Son of a bitch, this thing is slower than pregnancy. No, I gotta show you what I'm trying to get at, guys. So, Jesus. Where even is the thing? Oh my God. Where is it? Okay. Oh, shit. We're almost there, guys. I think so. Bear with me, guys. This is a shit bag. Son of a bitch. Are you good? Are you good now, buddy? You done? I think it's done. Meow, 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 meow. Meow, 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 meow. Nope. Not that one, dumbass. Meow, 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 meow. 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 Son of a bitch. No, 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 no. Meow, 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 meow. There we go. Okay, so this was the trade that I took. So I was actually able to capture this entire move right here, and it was a decent move. It was over a, let me see, from here where I entered, on the monitor tab, you can see here that I entered at 6. This stupid shit. The times are going to be off because I'm Eastern Standard Time, guys. So sorry about that. But that's 9:52, and that's 10:15. Okay, so it took me a little over. Oh, 2:12. So it took me a little over 20 minutes to be able to capitalize on this. So I basically entered at the break below the body of this candle right here, and I was able to ride out all the way to the bottom right here, basically. Now, let me see. Let me just make sure I got that properly. Yeah, yeah. Yeah, I was able to ride out to the bottom of that basically. And again, it is the reason I was able to do that is because again, as my screen time experience that I'm mentioning, you gain certain understanding on a deeper level fundamentally for the market, and you understand and you're able to see things that you weren't able to see before. So part of the reasons that again, as a beginner, I wasn't able to see, but now I am. I remember on the higher time frame chart. Let me pull up my journal with all the reasonings on what I said. So because again, it was a decent amount of shit that I wrote down and I was able to see. So let me see. So I took the opportunity the market gave me. Let me see here. Let me see. So I entered due to the high time frame conviction in the context of the market. This day we had a gap frame perspective. We had a look above and fail after the bulls retested a key level of structure and failed to make a breakout to the upside above that price key level. So, for the higher time frame perspective, bears are in control. And given the context of the very hectic bearish day yesterday, when you take Al Brooks' logic into consideration, I was looking for any high quality excuse to get into the bear trend, and I favored a gap and go to the downside as a more probable outcome. So, after I saw the 9:45 a.m. inverted doji candle, after the 9:40 a.m. inverted hammer candle showing a sign and lack of conviction to follow through to the upside to fill the gap, I thought this was a good reason to enter with high conviction. My plan was to look for a decently quick scalp. However, it was also my intention not to just look for a quick 2 to 1 or 2.5 to 1 risk to reward ratio type of setup. My intentions were to maximize the profits on this trade and only exit when the market shows sign of climax and no follow through. And we have really multiplied my profits. This chart continues to show signs or follow through to the downside and continue strength for sellers. So I stayed in until I was told to get out by the chart. And by what I mean by get out by the chart, I'm saying like you look for any signs of failure. Now, obviously, there wasn't any signs of failure on this right here, but due to every how far and big this move was, um, I really did maximize the profit. Obviously, we chopped around here, but you didn't know if it was going to chop around until it actually happened. So due to the fact that this was the highest profit I ever took, the fact that I was able to read all that and be able to analyze it, and I really did accomplish the goal of really maximizing the profits like 10, 20, 30 to 1 compared to a regular size loser. I was satisfied with that and I got out of the trade. Now, that's a lot. A lot of the stuff that I said you might not even understand. But again, that's what I'm trying to let you guys know is that the more that you learn about trading, the more certain things just come to you like that. And you can't even fully describe it, but you will understand it when it starts to happen to you with your day trading career. So this was a longer video than I thought it was going to be, but I had a lot to say. I got a very hectic ADHD brain. I'm happy to do this with you guys. So besides that, guys, stay safe, stay green, day trading knockouts out. Peace out.